Hello! Welcome back to another video from the Red Candlestick. Sorry that I did not, make anything yesterday. Part of the reason why is because, you know, probably a good time to save it for today because what we saw yesterday is, the stock market went down by S&P went down 1.5%. Nothing major. There was a bad jobs report, whatever, who cares. Diddy was a major Chinese company, they are losing money and they're quite expensive, but as a stock, their valuations are very high, but, you know, it's, that those two things, like, stirred up the market a little, and there's some other stuff, but the market's scared and whatever. I don't really care. But, I do think there are some things that we should talk about. And one thing I believe, I'm not just gonna say it's over exaggerated, because, it's not exactly over exaggerated. We do have a pretty high amount of margin debt, but honestly, if you did it as a percentage, especially if we got, like, I don't know, the S&P up here. Oh yeah, right here, U.S. S&P. If we look at it, past 5 years. Yeah. Damn this website. I don't. Never mind. Okay, there we go. Yeah, see, if we look here, the stock market has gone up a lot. Debt has gone up a lot, but the stock market has also gone up a lot. Even, like, compared to debt. So, I wouldn't be too worried about this. Now, debt has been becoming a bigger and bigger thing. Bigger issue. But, I'm not worried about it. So we see here central bank rates. The United States, has lowered their interest rate since the last time, which was a while back. That's crazy. 30 years are going for cheese. You can see here, I talked about this in, like, my first video or something like that, how, like, bonds are in, like, a bubble. Same old, same old. Now, something that I didn't mention is, here's our interest payments as percentage of our revenue. About 15%. We could definitely, double our interest rates and still be fine. But we can't, go too far, honestly. Which is, pretty horrible. But, that's just what happens when you keep borrowing your money until oblivion. United States expenses. As you can see, we had a huge, increase, in expenses for GDP. And honestly, we always have a surplus. We always, like, spend more than we bring in, so nothing new there, but, we should keep out for this, because this is pretty drastic. And, interest payments, actually, if you look at interest payments nominally, yeah, here we go. They have gone down slightly, which is weird because U.S. debt has gone up, but, they lower interest rates. That's just their whole entire game. And then, like, buying back, too. Oh, wait. Oh, I also had that there. So, this stuff is very important, but it shouldn't really worry everybody that much as people are worried. Honestly, I think it's the best thing. It's actually a good thing. If you have the right mindset. Crashes are, I don't fear crashes. I fear the boom, That's something you gotta take away. Like, don't fear the crashes, fear the boom. The boom is what always hurts everybody. In the end, the crashes don't. I even explained this in another video. Prices go up during booming markets. Prices fall during depression. No, I'm not saying depressions are good things. No, the Great Depression was horrible. Even though there was deflation, the Great Depression was horrible. 2008 was horrible. But it's important, to become a little bit sensible, This is a lot. Let's get up our GDP. This is like 2% of our GDP. That's insane. Like, you really gotta think about that. Like, this is like 2% of our GDP. Our interest payments. Interest payments. I have to emphasize that. Interest payments. That's why we got like only AA credit score, because if they raise interest rates, there would be a chance that we could default, but then they'll also the US government would just print more money. Honestly ridiculous. Who knows if there might not be a crash, but the longer, you put out the longer you kick down the post, someone has to eat it up, because if no one eats this stuff up, literally, I don't want to get into it because it kind of makes me depressed, but jeez, like, the U.S. economy will probably collapse, or something. I really am not betting on, I'm not betting on modern monetary theory. I'm not, I have put myself, already said that, I have a more Austrian view of the world. I do think that there are parts of the modern monetary theory that are right, but I think they are ignorant at not, thinking that, you can't, like, money is just a way to represent value. It's a way to represent value. If you have no way to represent value, or if that way of representing value is destroyed by just, like, weird manipulations, you gotta ask yourself, that's not good. Now, we can still raise interest rates. I really think, like, we would probably struggle, but we can raise interest rates. Look at here. We were paying like 19% of our revenue. I think we could pay like 30% of our revenue. Look, Lebanon pays 50% of their revenue. Now, I don't want to be like Lebanon. That's probably not a good example, but my point is that we could pay much more than we are currently paying. It's just no one would eat it up, But if you do eat it up, probably have the biggest economic, after, everything, we would probably have one of the biggest economic booms ever. Truly. Like, because what would happen after that is if we made interest rates start making interest rates a free market system, where interest rates are controlled by the people rather than the government, because, price is abstract, and when you have enough people, when you have all the people, not just the select few people, when everyone participates in the market economy, those abstract prices begin to mean something, begin to be properly priced. They begin to act, if you, so for example, actually there was an experiment once where they found out that, you know those contests at fairs or whatever, and it would they have, I don't know, a giant container of something like gumballs or something like that, and people have to guess the number. The more and more people you get, the closer and closer to the average, even though everybody was way off. Like, singular people are way off, but when you get them all together, it becomes the average. And that's something that people, the average is the actual thing. The average is the amount they discover. So individuals are flawed. Even masses are flawed. But the masses give the closest to real results in the end. This is part of the reason why I have more libertarian beliefs, is because I believe that even though people do wrong things, people may not give to others their money away, people may do drugs or do things that, but as long as people are not harming each other, the net average over time will improve, and everyone will become better. I mean, that's just that's a way to think about it, because it's just because you think something is wrong doesn't mean it's wrong, or it doesn't mean that it should be illegal. Because when things are illegal, it incentivizes to do it. Because people want to do what's wrong. When things aren't, there are certain things that humans know are wrong, though. There are certain things that people know are immoral, that you shouldn't do. Like, people know, in consciously know that hurting others is wrong. People know that. Instinct. By birth, People know that. People don't know, it's, you can't really teach a person. The person has to discover, though, that harming themselves, whether that be through, or harming their subconscious, or whatever, that, I'm getting too philosophical, but, harming their subconscious is wrong to themselves, and it hurts others. And as people learn that, if they do better, others do better. And as people, people already know that they want to improve their lives, but when they know that they can improve someone else's life by improving their lives, I mean, that's the success of the free market. That's the success of free liberty. That's the success of all of it. I mean, honestly, I want to look this up. Singapore for 1960s versus Singapore in the 1960s, Singapore today. See, Singapore was a very, very poor country back in the 1960s, 1950s. Very, very poor country. Now it's one of the richest in the world. Honestly, we could look that up. GDP per capita. Let's look it up by buying power. P per capita, PPP. Okay, and let's get Singapore. So, Singaporeans, their buying power is much, much higher than the US, and it has been for a while. They used to be much poorer, though. As you can see here, it was like, this was the year when it went over. That they started recording it, but it went over that year. They're going over afterwards. Like the year where they were, you know. But this is what happens when, you know, our country promotes freedom. I mean, Singapore has its issues, but Singapore has they have lower taxes than they used to. They have more freedoms than they used to, and they have expanded freedoms more than they used to have. But they still have basically no freedom of speech, and it's been under one-party leadership, which isn't actually a bad thing. It's just when you have only one major opinion, that's an issue. You know, you need multiple opinions, and it's honestly hard. It's hard to achieve, but you know, Singapore is a great example of what I was talking about. So that's about it. You know, market crashes are actually a good thing. They're not bad. Fear the boom, and yeah, that's about it.